Hey, Drenot Trust here. In this video, let's break down the future of MSTY and NVDY, which are basically yield max ETFs. So now the stock prices of MSTY, yield max, MSTR option income strategy ETF, and NVDY, which is the yield max NVDA option income strategy ETF, are driven by several key factors, right? You have performance of underlying assets. MSTY and NVDY are closely tied to the performance of MicroStrategy, MSTR, and NVIDIA, NVDA stocks, respectively. As these underlying assets fluctuate, the ETF's prices are affected. Option premiums, both ETFs use covered call strategies to generate income. The prices of these options, which are influenced by market volatility and the performance of the underlying stocks, directly impact the ETF's yields and attractiveness to investors. In regards to market sentiment, investor perception of the technology sector, cryptocurrency markets, particularly for MSTY due to MicroStrategy's Bitcoin holdings, and overall market conditions can influence demand for these ETFs. In regards to dividend yields, the high dividend yields offered by these ETFs are a significant draw for investors. Changes in distribution rates can affect investor interest and consequently stock prices. Higher volatility in the underlying assets can lead to more attractive option premiums, potentially increasing the ETF's yields. However, excessive volatility can also increase risk. The technical factors, chart patterns, price history, and trading momentum can influence short-term price movements. Fundamental factors of underlying companies like earnings, growth prospects, and valuations of MicroStrategy and NVIDIA indirectly affect MSTY and NVDY respectively. Please take a moment right now to hit that subscribe button and the like button. Once again, please take a moment right now. It's very easy to hit that subscribe button and that like button. So the broader economic conditions, factors like inflation, interest rates, and overall economic growth can impact investor appetite for high-yield ETFs and technology-related investments. Some insights about MSTY and NVDY potential performance next quarter. MSTY, again, that's the yield max MSTR option income strategy ETF, has shown strong performance with a high dividend yield currently at 154%. The ETF's year-to-date performance stands at about 79% as of the latest recording. MSTY strategy is closely tied to MicroStrategy's stock and Bitcoin's volatility, which could continue to provide high yields. NVDY, that's the yield max NVDA option income strategy ETF, has experienced a significant decline, with its price dropping 16.82% on the current trading day. The ETF's dividend yield is reported at 83.88%. Some analysts suggest that NVDY might underperform if NVIDIA stock continues to appreciate above certain thresholds. So, based on what's out there, right, MSTY has significantly outperformed NVDY over the past year. Now, the key performance highlights is, you have the year-to-date returns. MSTY has achieved a return of 22.64%, while NVDY has only managed a 0.97% return. The overall performance, MSTY has shown a total return of 79.98% since its inception, compared to NVDY's 43.30%. In regards to dividend yields, MSTY offers a higher trailing 12-month dividend yield of 99.73%, surpassing NVDY's 87.29%. Volatility, MSTY exhibits higher volatility at 24.99% compared to NVDY's 9.93%, indicating greater price fluctuations. There's also maximum drawdowns, right? MSTY has experienced a larger maximum drawdown of minus 33.16% since inception, while NVDY's maximum drawdown has minus 21.19%. Now, there are risks, right? I understand that the future is bright and all of that, but there are risks in investing in yield max ETFs. We have to be balanced. We have to be objective here, right? We can't all just be, you know what I mean? So investing in yield max ETFs carries several significant risks. You have the distribution risk. There's no guarantee of regular distributions, and the amounts can vary greatly between periods. You have high portfolio turnover risk. Frequent trading of holdings may increase transaction costs and impact fund expenses. Liquidity risk. Some securities, especially options contracts, may be difficult to sell during market turmoil. Non-diversification risks, right? These funds may concentrate investments in a small number of issuers, increasing volatility. New fund risk. Many yield max ETFs are limited operating history. They basically have limited operating history, making it difficult for investors to assess performance. Price participation risk. The use of option strategies limits the fund's participation in price increases of the underlying assets. Single issuer risk is another one. For funds focusing on individual securities like the Tesla, NVIDIA, the value may be more volatile than diversified investments. There's also market volatility. The funds are subject to general market fluctuations. Option-related risks. The use of options introduces additional complexities and risks, including potential for significant losses. Underperformance risks, right? These ETFs may underperform compared to simply holding the underlying assets, especially in upward trending markets. Currency risks. Some funds may be indirectly exposed to currency risk through their underlying investments. Now, we talked about it, the risk, we talked about the goodness of it, but how do you really prepare or properly invest in yield max ETFs? So you have to understand the risks, right? Yield max ETFs carry significant risks, including potential NAV erosion, distribution uncertainty, and limited upside participation. So be aware that these ETFs may not be suitable for long-term retirement planning. So you have to use an income tool to figure some of that stuff out, right? Consider using yield max ETFs as a tool to generate monthly income rather than as a primary investment vehicle. The high yields can be used to reinvest in other assets or cover expenses. So you're going to want to diversify your portfolio. Don't allocate a large portion of your portfolio to yield max ETFs. Instead, use them as a part of diversified investment strategy that includes other assets like growth stocks, blue chip ETFs, REITs, and traditional index funds. Monitor and rebalance. Regularly review the performance of your yield max ETFs and rebalance your portfolio as needed, right? Some ETFs may be more profitable than others, depending on the underlying stock. Reinvest strategically. Consider reinvesting a portion of the dividends back into the yield max ETFs during dips, while using the rest to invest in more stable long-term growth assets. Set investment limits, right? Only invest money you can afford to lose, as these ETFs carry a risk of significant value decline. Consider tax implications. Be aware of the tax consequences of high dividend payouts, especially if investing in taxable accounts. So stay informed. Keep up with the latest developments and performance of yield max ETFs, as their strategies and effectiveness may change over time. Now, what outlet do you think is the best to keep up with that? Please let me know in the comment section below. Okay, because there's so much information nowadays, so many outlets. What is the best? So in regards to selective reinvestment, instead of automatically reinvesting all dividends back into the same yield max ETF, consider reinvesting only a portion while using the rest to diversify your portfolio. So, in the game of stocks and basically the majority, if not all, investing efforts, it's best to just spread the wealth. Spread it. The more you spread it, the lower the risk. So, that's what I have for you today. Hit that subscribe button and the like button if you appreciate and you gain value from this video. Please hit that subscribe button and the like button if you gain value. See you on the next video.